Today, we have the privilege of speaking with Deepak Uppal, a distinguished figure in the world of stock trading. Deepak's journey in the financial arena is both inspiring and impressive. He began his career in consulting at Ernst & Young and went on to work for renowned companies such as IBM and Salesforce, further solidifying his expertise in the corporate world. His talent and dedication were prominently showcased in the United States Investing Championship in 2023, where he competed against some of the best traders in the world with a whopping 259% return. This achievement is a testament to his exceptional skills and deep commitment to his trading craft. In our conversation today, we'll delve into Deepak's journey, exploring the insights and experiences that have shaped his successful career in stock trading. Please join me in welcoming Deepak Uppal.
Good to see everyone. We had talked about doing this a while ago, I think, when we met at the gala, and hopefully I can share kind of what I've learned and what I've done, and hopefully it helps you guys out. And I think just in terms of my background, it has nothing to do with trading really. It's everything I've done in terms of trading. I've learned it on my own. But I was born, raised in Chicago. My parents moved here from India. I was born in Chicago and I've lived here pretty much, my whole life. Went to school at the University of Illinois here in Champaign. And, I was pre-med student and, majored in biology and chemistry. Decided I hated blood and needed to figure out what to do. So changed gears and I ended up going to get my MBA in finance. And graduated with that and went straight to work in consulting. So I joined Andersen Consulting. I actually joined the week that Arthur Andersen was going to change their name to Andersen Consulting. So it was kind of a fun time to be there during this transition. But like probably the first 12 years of my career were all in consulting. I did lots of different things around business process reengineering, helping clients and CIOs figure out what to do in terms of ERP strategy, and then actually helping them get that implemented within their organization. So I worked at Arthur Andersen, then I went to Ernst & Young, and then I went to IBM when they were starting their consulting practice around 1996 when Lou Gershner was there. So long time ago. I did that for several years at IBM, and then I made another career change and decided I wanted to, not travel and be on the road all the time. We had 3 little kids, and so I went into software sales at IBM, and I did that. I thought I'd do it for a couple of years and then go back to consulting, but I just loved it, and so I stuck with that. And from there, from IBM, I went to Salesforce and had a nice 10-year career at Salesforce, which was really incredible and the highlight of my career, I think. Just a great company to be a part of and grow with, and some great stories there. But all along that time, one of the things that I was always interested in and was working on was trading. And I started trading probably after I graduated and got my job at Andersen Consulting or Arthur Andersen. And there used to be, my friend and I used to talk about it. And so we went down the street, opened up a brokerage account at Pacific Brokerage Services, which was kind of one of the low discount brokerages. You had to go into the office, go into the Quotron, put your info in, get the stock quotes, and then go up to a window, tell the guy what you wanted to trade. He would execute it for you and give you a little slip saying, all right, here you go. And so that's kind of how I got started in trading. And I think the first stock I traded was Starbucks. And so, I was hooked after I made that first trade, and, didn't really know what I was doing and just kind of bought it when my gut said buy it and sold it. And, I don't remember there being a lot of success during that time. I mean, you made a few $100, you went and spent it, and that was about it. So, but then
how did you even find out about earnings growth and sales growth back then?
Oh, I didn't even know about that. Like, I didn't even look at any of that stuff. It was just kind of like I had watched the ticker,
like most of us.
I had no doing, yeah. So it was like, now if my kids did that, I'd be like, what the hell are you doing? But from there, 2000 happened, or the .com era happened, and I I ran an account like maybe it was 20 grand, 25 grand or something like that. I ran it close to $1 million in about, 2.5 years. And I was just
Wow.
hooked. I was like, oh my God, this is awesome. Money, I'll be at 5 million soon, 10 million, blah, blah, blah. And I don't have to work. And, 2000 happened, market crashed. I didn't sell anything and basically blew up the account and, went to like, I don't know, I got like 30, 40 grand out of it at the end of the day. And it was painful. And at that point, I stopped trading and, didn't have the money. And so I just kept watching the markets and I was like, it was still in me. Like I wanted to get back into it. I got back into it. And then, 2007 happened, lost money there. And then, got back into it. And then, I decided like, hey, if I want to play this game, I got to really learn how to play it. I can't just do all these different things and kind of think I know what I'm doing when I have no clue. So I started down my, path of learning how to trade. And it started out with IBD. I subscribed to the newspapers, started reading that diligently, read how to make money in stocks, went to some O'Neill seminars here in Chicago, and started to kind of understand a little bit more about how to trade and what to trade and why you trade and earnings and all that kind of stuff. So really, that was my first foray into really learning what to do. From there, I went and joined up with Stock Market Mentor, Dan Fitzpatrick. He used to do these free videos, daily videos. I started following that and then joined his service. And, I'm still part of his service, but, really learned a lot about the technical side of things. I think he did a good job of that. But then from there, I, ran across another gentleman, Dan Zanger, through Market Wizards, I think it was, and kind of got into his platform and, really found him very interesting in terms of the way he approaches it and the stocks he picks and things like that. But he didn't really do a very good job of teaching you what he was doing. Like he would just give you stock picks and you're kind of on your own to go trade those stocks. And then, I ran across Mark Minervini through actually Stock Market Mentor, Dan Fitzpatrick. And, I read his books and I was like intrigued by, the way he approached it. I loved his background. I thought it was very kind of, humble beginnings, and he was able to teach himself and, his stories. You guys all know his stories, but, I thought that kind of drew me into him a little bit. And I decided to join the platform in 2018. And so that's kind of where things started to change pretty radically for me in terms of going to the Master Trader program. And I did that, which was awesome. Learned a lot and really started to believe that I could actually get triple digit returns. I don't know why I believed that, but deep down in my heart, I was like, I can do this. This is why I'm here. And I just got into it and really studied it, and really,
What year was that,
created
Deepak?
kind of my own. What was that?
What year was that?
2018.
2018. Okay.
So it was 2018. And I think the year after that, I was actually just going through it. I found some emails I'd sent him to say, year 2019 that I really started applying his approach. I think I did 59% return, which was awesome. And then, 2020 was a great year where I did like 230% return. So, that's where things kind of changed for me. Obviously, I had a lot still to work on. The next 2 years were rough. I think I lost 15% in 21 and, I think like 30% in 22. And then obviously last year was a great year at 259%. So, the net is that, it really allowed me to kind of figure out how to trade and what were the right things I needed to be looking at. So that's kind of how I got into trading with Mark.
So, question on your two down years, 21 and 22. Do you feel, given where you are today and the progress that you made, that that's something you could have avoided, or you think it's just part of the market just shutting you apart?
Yeah, I think that I don't know if I would be able to avoid it. I think I would have a drawdown. I would wish it was less in both years than what it was. But some of that goes to kind of my personality of always wanting to try to do something. And Mark talks about sit out power, and that's something that I continue to work on every day, basically.
So just getting
into
getting into the still in the initial part of understanding where you are. When you moved over to Mark, what was it that really what were the key things that you found really attractive with his methodology?
Yeah, I mean, I think what I liked about it is the way he broke everything down and had like rules around each aspect of trading. He had an approach of what he looked at to scan for the right stocks to buy, what was important, what really drove stocks. I thought that was real important, which I really never thought about in that way. Number two, I think when I really started to dig into the analytics and the math behind trading, it was kind of an eye opener for me. One of the things after I read that book I did was I went back and I downloaded all my trades from the year before, and I went through it, and I looked at it and I said, okay, hey, if I would have just taken like a 8% loss on all these trades that I lost more on, like what would my return have been? And it was staggering. Like my jaw dropped when I looked at that number. And after looking at that, I just kind of like really pressed upon me the importance of managing your risk and your losses, because that's the trick to this game. I think to really get those great returns is you do need to manage your risk. And however you think about it, however you think about losses, and however you can get yourself to take that initial loss quickly is, I think, critical to finding success.
So you just said that you went back
And
to your trades and you essentially looked at every trade where if you could cap your loss at 8%, then how things would have changed. Is that what you said?
yeah, exactly. So I mean, I ran some scenarios where I said if I kept it at 8% and say if I wasn't even able to do that, I did it at 10, 11, 12%, how much more would I have made? And it was six digits that I would have made more
Wow.
by controlling. Yeah, I mean, for me, it was just a huge aha moment.
So risk management is a big one for you. And what about where were you with regards to progressive exposure before you entered Mark Minervini's teachings? Was that something you even heard of or did, or does that? And how do you
Oh,
use it now?
no, I never heard of it. I mean, I kind of maybe did it to the upside, but not to the downside. Like, so, when I felt that the market or the stocks were moving and, I had no idea what I was doing. I mean, I would just go in big onto certain accounts and certain stocks that were moving. And then, on the downside, that's kind of where I think I didn't really know about it. And so that's a big area that I think from Mark's perspective, from what he teaches, was a big help for me, is to like start playing small ball, if you will, and see what's going on and use these testers, if you will, put the line in the water and see what happens versus, just going in and starting to trade, your normal size.
So how do you use it now? Do you use, so I know there's some students that use it very methodically, very, they've got a formula. If you take Shahid, uh, I actually struggled with it initially. Um, I would essentially go in small, but increase it. But I just did it more in terms of, okay, I'm just going to start increasing versus having a specific formula. Shahid Khan, I believe it's Shahid Khan, guy out of Edinburgh or somewhere in England. He's done fairly well too. And I liked what he did, which is he'd go in with, and again, I'm not going to quote this exactly, but he'd go in with like 5% percent positions. And if that was working, then he doubled it to 10. And if that was working, then he doubled it to 20, or that he eventually get to his 20 or 25% positions. And if things weren't working, then he'd do exactly the reverse to get out of the market, which I thought was a very simple way to do it. What are your thoughts?
Yeah. Yeah. I kind of follow a similar sort of thing, like not maybe exactly to that. It's not very methodical, if you will, but I'll
Mhm.
buy 5%. And if there's a I want to buy, I'll buy 5% and just hold it in my account and just see kind of what it's doing. So it keeps my eye on the stock, especially if it's something that I think is going to be a winner or is going to, an area that I should be looking at. I would do something like that.
So let's hit some of these big categories. So one of the big categories you talked about was risk management. The second one over here is progressive exposure. What are some of the big categories that you found that were changing for your trading, in addition to these two main areas that we've talked about?
Yeah, I mean, I think the other things that really changed for me, outside of the risk management and the exposure was the idea of not being diversified. I used to be one like, I'd have like 7, 8, 9, 10, stocks in a portfolio. And, I never really got the traction to get big gains out of that. Like so like reading Mark and following Mark, kind of that helped me to kind of figure out like, how do you actually get these big gains in your portfolio? And, you can't be diversified. You need to be concentrated, is kind of where I learned that, from Mark is. So, now, maybe 4 positions, maybe 5 is kind of my max that I would have at any given time in a portfolio.
So Deepak, you mentioned when we were at the gala event that at times that you might even be in 1 or 2 positions. The entire portfolio might be in 1 position, but not only just 1 position, but you might be in 1 or 2 positions with margin on them too. So you might be. I'm hypothesizing, but are you ever at a point where you might have 2 positions and they're both taking up, 100% of your portfolio? And what for people that don't understand what I'm saying over there is, if you have $100,000 and you have margin, you could be in 2 positions, and each one of those could be $100,000 when your account's only worth $100,000. So do you get into situations like that? Talk more about it.
Yeah, I mean, I do. There's like right now, for example, I'm in 3 positions, but they are, and with margin you can go up to 4 times whatever you're trading, as long as it's marginable. And so, yeah, there's lots of times where I might have 2 positions that are 200% of my portfolio value at one time. So, you're talking 4 times the value of your portfolio in 2 positions. So, for me, I'm okay with that. Like I can live with that. I don't get too nervous. I mean, it's not something I would recommend someone that's brand new to do. But if if you've been doing this for a while and you feel comfortable with margin, that's kind of how I've grown my accounts over the years.
So how do you manage
you do need to
risk
be
when you
careful.
how do you manage risk when it comes down to having, say, each 2 positions, each one being 200% of or each one being 100% of your account, or maybe even 200% of your account? How do you manage risk? Is that when you get into really trading next to the danger point in terms of very narrow stop losses?
Exactly. So I mean, when I look at my accounts, like when I'm looking to risk on my account is like in that sort of situation, maybe 2% of my account value I'm willing to risk on the trade. So to do that, you need to be very, very precise in terms of where you're buying and where your stop is. That you feel comfortable that, okay, you know what, I think that the odds of this going up are higher than the odds of my stop getting hit. And I'm willing to risk, the 1% or 2% of my account value to test it out. And I may not do that right away. Like I may, I would not buy it all at once. Obviously, I'd be progressively exposed, doing progressive exposure into that position. And I've got a few charts and stuff, and I can walk you guys through kind of some examples of what I've done recently and why I did it. And, I think that might be a little easier to take a look at it. But, a lot of times if I buy a position, I'll just buy the regular, my 25%, 30% position size. And, if it starts to move and it's looking good, it's setting up nicely, or it's made a move and then it's setting up again, then I would maybe take a look at, okay, doubling down on it or pressing that position even more because it's acting right. And then that's where I would like go into that position, figure out where I could buy more of it or double up on it, where my risk is very limited on that second portion that I'm buying.
Let's talk a little bit
Because
more
now I've already
about
got
that.
a
So look,
cushion.
okay, one of the things that you mentioned also the last time we spoke in South Carolina was that you're a big fan of pullbacks.
Yeah.
And so you know, as I was thinking about this and prepping for our talk today, so obviously Minervini, I mean, we've all studied, most of us have studied Bill O'Neill, and in addition to Minervini's stuff, Bill's all about the cup and handle. You know, in his trainings, he talks about the saucer and things like that. And Mark Minervini's taken most of his variations, such as the low cheat, the cheat, and then the cup and handle, and then the pivot point, and then the pullback buy, those kinds of setups. Do you find yourself trading all those, or you're pretty much very narrowed down into a couple of setups with regards to what Mark Minervini teaches?
Yeah, no, I mean, I'll use all those, right? Like I use a cheat, I'll use a low cheat, I'll use a handle, I'll use bull flags as well, quite a bit, as a continuation pattern. So those are the things I like to look for. But the pivot is kind of what I'm looking for. And I'm looking for tight trading. Like, say a stock
Mm-hmm.
makes a big move up, 5, 8, 10%. And then it really kind of quiets down and it's only coming down, a couple percent or something, and it's tight for a few days. Like that's where I would look to jump in and add to my position with a very, very small, like 1% stop, 1.5% stop on that additional that I'm buying.
Okay. So you're getting in at tight positions when it goes up and it's providing additional opportunities. You're getting in again at tight positions over there. And either it's tight or there's a
Or like,
pullback buy, right?
right. Like say, I buy something because it's breaking out. So I'll buy my regular, whatever size I'm going to buy for it, say it's 1,000 shares. A lot of times what I find happens, and Mark talks about this too, is that, it'll break out, but then it'll come back down and kind of, go back and consolidate again for a few days or a week or something. And then it'll make a second attempt. I find usually on the second attempt that it's going to be successful. And because what happens is a lot of people, I think, get tired of just holding it. And as soon as it breaks out, like they think, okay, this is time to sell. At least I made a little bit of money. Get out. That puts pressure on it, comes back down. And then it consolidates again for a few days. And then it goes up. And by then, like whatever resistance there was, it usually gets cleared out. And so on that second attempt, before it does that, usually, that's a good time to try to, where I will try to load up a little bit more on that position, because then I know where the danger point is as well. It's easy to identify, and then you can put on a bigger position.
Yeah. Now, one of the things that has created a little bit of confusion with the cheats and the low cheats is, very often when Mark is looking at a particular stock and he's looking at something that's got a somewhat of a cup pattern to it, and he goes, "Oh well, there's way too much overhead supply to this, so it's dangerous." But with the nature of the low cheat and cheat, you're gonna have overhead supply because of the left side. You're in a cup pattern. We haven't finished building it out. One of the things that Mark Ritchie has said again and again is that he really doesn't do trade low cheats and cheats unless it's a large cap or a mega cap. He finds that those tend to do a lot better with low cheats and cheats. Well, what are your thoughts, or do you have, or how do you trade the low cheats and cheats when you do?
Yeah, I mean, one of the things, and I think we'll get into a little bit, is the type of stocks that I trade. I tend to trade a lot more on the mega caps than I do, kind of like mid caps or small caps. I do trade those, but what I find is that they're just too whippy. Like you said, like so if you're gonna buy a cheat on that, right, or a low cheat on a small cap, they're pretty volatile. Like they'll move around quite a bit. And so to get size on to get the return that I what I'm used to is that it makes it very hard for me to do it. So I hear what he's saying on the smaller cap stocks. Yeah, on the mid cap stocks, you still get it, but it's not as bad, and you can control your position size and still make good money because the dollar moves are going to be a lot larger on a mega cap than they will be on a small cap stock. So
Typically,
yeah, I agree with him on that.
what is a range of, like, what is the price range of your trading? You mentioned, I think you said you don't really do much, you don't trade many stocks below $50, right?
Yeah, yeah, it's usually 50 and above. I mean, I prefer stocks that are over $100. Just I find them to be a little bit more um stable, if you will, or more widely followed, which kind of goes against what Mark says, but that's kind of worked for me, so I kind of stick with that.
Now, one of the other things you had mentioned is a certain industries you stay away from, and you're really geared more towards certain types of industries. Can you talk about that?
Yeah, so that was one of the things that when he really kind of took some time to talk about this during the Master Trader program, and what groups work, what groups don't work. I mean, I used to trade like the oils, the metals, and whatever was moving, I would trade it. And as I really thought through it a little bit, kind of it hit me that trading those things is kind of hard because you're not trading the stock or the company necessarily, but you're also trading an underlying commodity. So you got two things you got to have go in your direction. One is that the commodity has to be increasing in price. And number two, the company that you're buying that deals in that commodity also has to be doing well. So now you're dealing with two things that have to work in your favor to get some profit out of it. And just those things don't really work that, they're not growth engines necessarily, in my opinion. And so as I've kind of done my own research and kind of thought through it a little bit, where I've been successful is that I really only trade very specific industries. And I trade tech, I trade the chips, which I consider tech, communications. I'll trade retail and maybe some industrials, but that's kind of it. Like I don't go outside of those things. And biotech I don't touch. It's just too volatile. And I know Mark puts a lot of biotechs that can move, but I just would not be comfortable putting on any size on a biotech. And I don't want to buy a biotech that has to move up, 30, 40, 50% for me to get the kind of return I can get if a big cap moves up 5%. So to me, it's just the risk reward isn't there for the way I trade.
Well, especially if you're concentrating one or two positions with margin, where each one of them makes up 200% of your account. You're trading biotech, and you wake
Yeah,
up one day and they've
yeah,
got some negative news. That's a 40% hit on one particular stock, right? And if your
exactly.
stop doesn't really catch, then you're screwed. Yeah,
Yeah, exactly. So,
yeah.
I mean, I used to trade biotechs, and when I first joined the platform, Mark always has biotechs that he puts out there as potential candidates, right, on his alert list. And I tried trading a few of them, and I just got killed every time I did it, so I just stopped doing it. But
All right.
one thing I do want to say is that we talk about like the concentration. Now I'm not concentrated. That's not the way I trade like all the time. I mean, there's certain points in time during the year that I'll do that. But it's maybe twice, maybe three times in a year you get that opportunity to be trading like that. And so those are the times you have to take advantage to do that. Otherwise, I'm not trading that aggressively on a daily basis or throughout the year. So I just wanted to make
Were
sure
you
that everyone
there?
that I mentioned.
Were you there in this last month and a half of runs that we've had? Were you pretty concentrated?
Yeah, for sure. I mean, I'm concentrated right now, like quite a bit, just because the market's doing well. Chips, I'm concentrated in, say, in a few tech stocks, but that's it.
Okay. Just looking at our questions in this area. Drawdowns before or after Mark Menevini, what kind of drawdowns are you typically experiencing? Are you like in a bad period, in a good period? What are you used to?
The way I trade, like, I mean, I in the past I've had huge drawdowns, like 40, 50%, right? And that was part of the reasons I was like, I have to learn how to do this the right way. But like I said, I had over the last couple of years, I had the 10, 15% one year, and I had 30% the other year. And so those were just, they were painful. They were just unacceptable in my mind. And so, that's what I'm really working on is, I know I can get the upside when the market's good. My whole thing is, how do I teach myself or train myself to do better when the market's not doing well? So that's something that, I'm working on to kind of control my downside from a portfolio perspective.
Okay. So one of the things that we're going to go into over here over the next 30 minutes is we're going to go into Deepak's work week, what that looks like, and then we're going to go into specific trades and tools. Before I do, I want to cover one really important part, which Mark always asks this question, which is how many of you think that you can achieve 100%? And so we're talking about mindset now. And his thing about this is that for all of you guys that don't think you can do 100%, you definitely won't do 100%. But for the people that do believe that you're going to do 100%, there's no guarantee, but you're more likely to because you believe that it's possible. One of the things I was asking Deepak is, I'm really curious because now that he's achieved such momentous returns in the market, how confident does he feel about what type of return? So I was like, when you begin the year, what are you thinking that you're going to achieve that year on with reasonable ease?
Yeah, I mean, that's a great question. I think that was also kind of one of those turning points for me when Mark asked that at the Master Trader program, and he put that question out there, and I had no idea I was going to even ask, and I just raised my hand, not thinking like, yeah, I can do it. That's why I'm here. Otherwise, why the hell would I be here? And there was like 4 or 5 people that raised their hands, and after he said that, I was kind of like, huh, obviously I raised my hand because I do believe it. So, I know I can do it. I just got to, figure it out. And so, I'm at a point now where like I'm very confident that I can do it, and confident enough that I've, this is my career now is trading. And so, in terms of when I start the year, like I'm always thinking double, at least like how do I double my account? And even if I don't double it, I want to, maybe I'll get 75% or 60% or something, right? But my goal is to double it up, and if not, do better if I can.
Mm. Okay.
So that's
going
my
back to
mindset when I
asked you this question when we were prepping for this interview. So, and I've told this story to many people in the group, and they found it very helpful. So I'll share it again. When I joined Mark Minervini in 2019, I found that my results really weren't that good. And I was, like Mark, I'm a huge fan of Wayne Dyer and Tony Robbins and a few other guys that he's mentioned in terms of personal development and mindset development. In fact, Jeff, one of our friends on the group, I was telling him about a mindset course that I'm in the process of taking by Tom Bilyeu. It's probably one of the best things I've ever done in my life. And it's just incredible what you start achieving when you develop that mindset. So Tony Robbins in 2019 at this conference was with Grant Cardone and also Sylvester Stallone. And Tony reached out to the crowd and said, how many of you like what you do? And 100% went, yeah. And how many of you love what you do? And probably 70% said, yeah. And then how many of you are passionate about what you do? And probably 30 to 40% said, yeah. And Tony turned around and said, it's unlikely you guys are going to see super performance in your lives, because super performance doesn't really come from like, love, and passion. It comes from obsession. And for me, that was such a golden nugget, because when I went back to Minervini's weekly sessions, I was like, I'm not obsessed, but how do I fake it till I make it? And what does obsession look like? And for me, Mark Minervini's, he's the God that we all look at, but somebody that was more realistic that we could emulate was Mark Ritchie. And I noticed that Mark Ritchie was obsessed. He knew everything about all the material that Mark Minervini had put out there. He had memorized it. He could tell you what anywhere. You could say, tell me between 5 and 7 violations. He'll route them off. Tell me the confirmations are. Tell me the 3 different methods to modify your position as the position's going up. He had it all down. And that's when I went and I reread the books, created 1,000 flashcards, and memorized this stuff. And I found, okay, now I'm really beginning to reach a level of mastery, or at least it's in the near future. What I noticed about you is you're obsessed. And by the way, that's a compliment, okay? Obsession is a real compliment. When we were talking, and I was like, so Deepak, are you obsessed? And at the gala, he said, yeah, when I go for a hike and I'm looking at the clouds, I'll see a chart pattern in the clouds. That's what you told me when we were chatting. So the reason I bring this up is because there's a lot of students over here and they're dabbling and they don't realize that that's going to get them nowhere, that you really have to take this all or nothing, and you're an all or nothing guy. And yesterday when we were chatting about this, you mentioned that you're all in. So if you were talking to your son or daughter and telling them, hey, this is how, if you want to be successful, this is how you've got to go about it, what would that conversation look like?
Yeah, I mean, I think it would be similar to kind of what you're saying is, I mean, if you want to be successful in anything, and I always use the analogy of like, if you want to be successful, you have to be able to put in 10,000 hours to even be close to being an expert in whatever it is that you want to do, that you're passionate about. But I tell my kids that, hey, you know what? Here's a way that you can kind of have some financial freedom if you want to figure it out, but you're going to have to put in the time, the effort, and really like not go through the motions, but you really, really love this. Like, it's not easy. Most of the days you trade suck. There's those handful of days where the market goes up and, you get some good returns, but the rest of the time sucks, or, it's kind of like heartbreaking, if you will. Like, it's like your girlfriend or wife leaving you like every other day because the market goes up and it comes right back down. And you lose the money, it's brutal. So, you really have to be dedicated to, it's more important than anything else in your life that you're going to carve out time to go do it because it's that important to you. It's kind of like working out, like everyone says you should work out, it's good for you, but most people are like, you know what, I don't have time, or I'll do it tomorrow or whatever, right? But if you're really dedicated to your health, you're going to find the time and you're going to go work out. And so similarly, whatever your interest is, you have to be passionate about it, and it's got to be exciting for you, where it doesn't feel like work. It's just you enjoy doing it. It's like I enjoy playing golf, and to me that doesn't feel like work, right? I'll go do that all the time. And trading to me is very, very similar. It's just fascinating for me, is to kind of, put yourself out there and challenge yourself against all these other people that are trying to do the same thing.
So let's dig in a little bit more in what obsession and all-in means. So I guess the first thing is you got to master the materials, right? You've got to read them, you got to memorize them, you got to know off the top of your head, hey, if I've got a position and I'm making money on it, what are my three choices in trading around that position? What are all the 5 to 7 violations? What are the 5 to 7 confirmations? So you got to know that stuff. Am I saying that that's just the basic stuff to start with?
Yeah, I mean, I think there's a few pieces of it, right? One is, I think you have to like just learn the blocking and tackling, which is exactly what you said, right? Like, you have to learn that. The second thing you have to learn is about yourself. What is your mental psyche around trading? Are you really scared to trade, and you're not going to execute and move on something? You're going to wait till it tells you, yeah, you're making the right decision, but by then it's too late. What kind of risk can you take? What's your risk tolerance? Are you going to be, watching every little tick up and down that's going to make you nervous? So there's a lot about, you have to learn about yourself. Are you okay with risking money? Are you okay with, that aspect of it, which I think is real important. And then the third is experience. Like you got to just do it, right? And I think when I say that, like, what I would recommend someone do is, like, if you're brand new, and I'm doing this with my daughter because she's just learning, right? And so I've been working with her. We've gone through materials, the blocking and tackling, and she'll show me charts and we'll go through them. But then, I go, take some money, not a lot, open a different account and open up an account and put the money in there and start trading and learn slowly, right? Like, she's young, she's got time, but the experience you get of understanding, like, oh shoot, I just lost 5%. Like, how do I feel about that, right? And how do you manage your emotions and all that? I think that's kind of what the experience teaches you. And then, it's the constant learning around those 3 areas, in my opinion.
What do you mean when you say blocking and tackling?
Blocking and tackling is just like, okay, scanning for the right stocks, right? When am I going to buy them? What is the right point to buy it? What's the right point to sell it? What are like you said, the violations? I mean, to me, that's all the blocking and tackling around trading that you need to know that. But then the other aspects of it, how you manage your account, how do you manage, I say this a lot, but you could give us both the same stock and say you can only trade these three stocks all year long, and everyone, the stock's going to do what stock's going to do, but three people will have three totally different results because of
Right.
how they manage that and how they manage their own their psyche, if you will, around the trades. Like they get nervous, they
Right.
sell out too fast, or whatever it is. So you could have one person that does 100% on those three stocks. You could have one person that breaks even and one person that loses 30-40%. But it's the same stock, and so you just don't, that's
Right.
another big part, how you manage your trades
Yeah.
once you're
Okay,
in.
now let's dive into the next level, Laura. So before we get into actual trades, let's talk a little bit about how your week starts. So what is you've wrapped up a week on Friday, and you're getting ready for the next week. How do you plan your week? Where do you start with scans? Where do you end up by Sunday night?
Yep. So yeah, my week starts on Saturday, so it's kind of weird, right? Most people's week starts on Monday, but I start on Saturday. So on Saturday, typically what I do is, my routine is I will I get IBD, I get the actual physical newspaper. I'll read that just to kind of get a feel for what's going on, like overall in the market. What are the different things? I mean, I kind of follow it, but I like to read it on Saturdays because it's a good summary of what the week was and what's coming up next week. Um, the other thing I do on Saturdays is I will do scanning work. So I'll go through MarketSmith and run the different scans that I have, and basically Mark Minervini scans. But I've kind of tried to narrow them down, so I'm not looking at thousands of charts every day or on Saturdays. But I do go through those, and I like to do it because you get a different perspective when you go through it on your own in terms of like, you'll start seeing, oh wow, there's a lot of energy stocks setting up, right? Like, or there's a lot of tech stocks setting up now. I need to be aware of this, and you come across the stocks that you weren't thinking of, right? So you put them on your list, and you go from there. And so I'll take those stocks and I'll put them into my trading platform, and take a look at them in terms of what's the pattern, what does it look like. I can go into the weekly, the monthly, the hourly charts and take a look at it, and just so I get a feel for it. And that's kind of my Saturday routine. Maybe it takes an hour and a half or so, on a Saturday. Then Sundays, typically what I do is, in the evenings, I'll listen to Mark's weekend update. I'll get a sense of what he's saying. I really like that is non-negotiable. I have to listen to it every Sunday, no matter what, before before the market opens on Monday, because I just get a lot of value out of it. And then what I do is, I'll take a look at the futures, kind of what are they looking, pointing at for Monday, and that's kind of my Sunday, if you will. And then Mondays, or during the weekdays, Monday through Friday is pretty much the same every day. But
Wait, quick question.
one of the
When
things
you're looking at the futures, what are you really looking at getting out of that?
I'm just looking to see, like, what are they pointing at? Like, is the market look like it's going to be weak this week? On the open on Monday, is it looking positive? I mean, I'm just trying to get a feel for what's going on, right? Like on a Sunday night,
Okay.
and I'll look at kind of how, you know, what's Europe doing? Maybe I'll just look at it. Like, I'm not going to do anything off of it, but it just gives me a feel for what the sense is around the markets. Um, when Monday comes around, I start every day working out first. So that's the first thing I do is get up. It kind of, puts me at a good mental balance, if you will, for the morning and for the start of the day. So that's kind of a non-negotiable for me as well. So I work out, and then I'll try to get to my desk like 45 minutes before the market opens. And there's a few things that I do when I get to my desk. One is I have a checklist that I follow every day, kind of religiously. And really what I do on that is, it kind of tells me I look up, okay, what's Mark's STEM model saying, right? What does he have that at? Is it red, orange, or green? Then I'll take a look at here actually. I'll take a look at, what's the market trend in IBD? How many distribution days do we have in the NASDAQ and the S&P? So I'll look at that. I'll look at, the VIX. What's the VIX at? I'll look at put call ratios. I'll look at the bull bear, indicator. What's that showing? And I'll look at the put call ratio, and then I also look at the number of stocks above their 200-day moving average, just to get a feel for kind of how strong the market is. Is it oversold? Is it overbought? Or is it kind of neutral? And that kind of gives me just a feel for, what the day could bring and kind of where the market is in general. Then from there, what I do is I go in and I start taking a look at the stocks that are on my watch list. Like, are any of them moving? Are they doing anything crazy? Is there any news on any of them? And so that's the next thing I do, is just kind of go take a look at what these stocks on my watch list are doing. And then once the market opens, I sit there and I actually watch this pretty religiously. I actually enjoy it, even it may sound kind of weird, but I do enjoy watching the stocks trade and kind of what they do. What I find is that each stock has its own personality. And so if they're on my watch list, I want to learn kind of how they move in general during the course of the day. It's interesting, and I don't know, maybe you've noticed this or not, but some stocks, they'll open down, and then they'll in the morning, and then after the first half hour, they're back to going up, or being neutral or whatever. So, or a lot of stocks make a big move up in the morning for the first half hour, and then they always come down, and especially if they come close the gap. And so that's maybe an opportunity if I'm looking to get into something, to maybe buy it if it makes sense. But I watch these things and just kind of see how the market is trading overall. So I'll watch maybe like 70% of the day. I'll watch what's going on in the markets, and there's certain times where the markets always goes down during the lunch hour or whatever it is, and then definitely the last hour of the day I want to watch the market and see what the stocks are doing, because the close is, I think, the most important, to see how the stock ends up closing. So that's a non-negotiable. I got to be in front of my laptop, at the last hour of the trade. Once the market closes, I'll spend about an hour going through the charts and marking them up based on what happened, and see if there's anything that's going to be actionable or that I should be looking out for the next day. That, okay, what if it crosses this line or goes above this pivot, like I should be buying it, right? So I'll take a look at that, mark it up, and kind of put those stocks at the top of my watch list that I use. And so that kind of ends my day, and then do the same thing the next day.
And would you, so when you scan, you're using MarketSmith, you're using pretty much the same scans that Mark's talked about in the Master Trader program. How do you find there's a big overlap between your scan list versus his in terms of your output by Monday morning?
Yeah, you know what I do? Like, I took Mark's list, and I've actually got it. You can have it go against different indices and things like that. Like, you can have it to go against all stocks, or you can have it. I have it like set up. Like, I've got a few different scans that I use, like going against the blue dot, the blue dot stocks, or the stocks that are near pivot points and things like that. So I go through a lot of them. And since I'm looking, and I've got it set to be higher price stocks, so there is, when Mark's picking big caps, yeah, there's definitely overlap. But if the big caps aren't working, then there's not a lot of overlap between what he's looking at and what I'm looking at, probably.
Right.
Like, I biotechs and things like that, which he puts on there quite a bit.
Okay, and when you come up with your list, one of the things you mentioned when we were prepping for this interview is that in your initial days, you used to have a very long list, but now you've got a much shorter list. So tell us what progress from the long list to the small list.
how it progresses? Is that what you're asking?
How do you progress from going to this really long list in your older days to now having a much tighter, shorter list?
Well, you know what? Yeah, so like I said, I'm looking for stocks that are in specific industries. So that knocks out a bunch of different stocks out of the list. Then I'm looking for stocks that are higher price, so that knocks out a bunch of stocks that are under 50 or 75 bucks. The other thing I do also is I look for stocks with a high average true range, which is I don't know if you're familiar with it, but it's kind of like how much that stock tends to move per day. So I look for those stocks as well that are like a little bit more, they move a lot more when they're going to move. So things that are over $3, $4, $5 is kind of what I'm looking at. And so
So
that
for
shrinks
people
the
that
list
don't,
down even more.
for students that don't understand that, Deepak's referring to ATR, right? Which is the
Yeah,
average
ATR,
true
yep.
range of a stock moves within a day.
Yep.
Yeah. Okay. And you like that
Yeah.
because you like the volatility, or what is it about the ATR that you do like, that
No,
having a
so
higher
you know what?
ATR?
One of the things, yeah, I talked about this, I think, at the gala too a little bit, was that, to me, when I like look at my numbers and stuff, I like to look at them in dollars versus percent. Because even though you look at my numbers and the percents are very low in terms of my stats, like 3%, 4%, they're low, but a 3% move or a 4% move on a $400 stock or a $300 stock is $10, $12, right? So
Mm-hmm.
if I go in on a stock and I kind of have 500 shares on it and it goes up $12 in a day or whatever it is, right? Like to me, like it's just easier for me to think about it, but that's a pretty big move dollar wise in terms of my account value. The percent doesn't seem like a lot, but the account value is a lot. And I'm buying, I might be concentrated in that, right? So a $12 move with 400 shares, that's $4,800. So if you have a $100,000 portfolio, you just made 4.8% on your account.
Mm-hmm.
So
Right.
that's why the ATRs, because part of this thing is you don't want to be sitting in a stock that's moving real slow and it's going to take you a month or 2 months for it to move up 12%, right?
Mm-hmm.
Like that's just, to me, it's kind of like you're just your money. Just I can, if I can get that in 10 days or a week, like I'd rather do that and then take that money out and then go do it again with something else that moves like that. So that's kind of why I picked those higher ATR stocks.
Okay. So now's probably a good time for us to dive into some of your trades and the tools. Before we do that, I had some questions about your some of the metrics over the past year as you were competing in the investing championship. I guess the first basic one was, what was your average loss and your average gain?
Yeah. So my average loss was 2.3%, and my average gain was 3.25%.
Okay. And how many trades did you do?
What's that?
How many
A
trades
batting
was
average.
that?
Yeah. So batting average was 50%, and I did 152 round trip trades. And I want to say that because it doesn't sound like a lot of trades, 152 trades, but the way the platform calculates it, it's based on when you close out of the whole position. So a lot of times I trade around a position and buy, I'll load up a little bit more, or I'll go concentrated, and then I'll sell some of the concentration, or 3/4, but I'll still hold a quarter of it. And then when it sets up again, then I'll buy again off of that and add some more shares to it. And so like that may be, a month or a month and a half by the time I go through that before I decide, okay, I'm just going to sell the whole thing out. And so then when I sell the whole thing out, could be considered a trade. But within that trade, I may have made like 10 trades within there. So
And am
it's
I
a little
correct that
confusing.
for students they're going to take these numbers and plug them into the RBF calculator? They're not going to get the right answer because you're using margin here, right?
Correct. And I'm not using an
Okay.
equal part of margin. Like I'm not very, it's got to be 30%, or, each trade has to be 30%. That's one thing that I'm not, I like when Mark says this is kind of an art, like when you feel like the stock is moving, or this is the one you should be jumping in on, then I will buy, more than 30% or whatever it is. Like I said, I might buy 200% of my account value for that one particular stock. So the numbers don't really work out perfectly. I mean, part of the thing you have to do is like have equal 25% exposure on every trade, right? For it to really kind of figure it out and calculate it.
Yeah, and I just want to reiterate what you said earlier is, look, guys, for many of you listening to this and you're new to trading, be very careful with margin. I mean, Deepak's been doing this for decades and he really knows what he's doing. So you really have to get used to trading and really know what you're doing before you start betting 100, 200, 400% of your account, right?
Yep. Totally
Yeah.
agree with you.
Cool. Let's one more conceptual question before we get into tools and trades.
Okay.
We all know, most of us know how to buy. We've been, if you read the materials and you train well on it, buying is the easy part. Selling is the difficult part. Now, again, Mark's got some great guidance about, once you're trading around a position, on when to sell half, when to move your stop up, when to free roll, when to break even, and all that stuff. Tell us about your thoughts on selling.
Yeah. So, that's something that is always work in progress, I think, in terms of when to sell, because obviously we all want to max out and get the most we can. I go by a few different things. One is, if I have like a 3R, like 3 times my risk return. So like I usually want to start unloading a little bit of it, depending on, kind of what the market's doing, how the stock is, what the stock is, and, maybe start to take off a little bit at 3R, if you will. I mean, that's going to be my goal. Last year it wasn't. It was just, if I could do 2 to 1, I was happy. And so this year, I think what I've learned just by looking back at my trades and kind of where I bought and where I sold, I think I was selling a little too early. And, I think I could do better if I just kind of held them a little bit longer. So that's going to be one of the things that I've changed for this year, is to try to hold things a little bit longer than just get rid of them.
Sorry, and what else are you looking at changing this year?
That's a big one, is to really try to push my upside a little bit more. The second thing I'm working on is patience, to be a little bit more patient on my trades. I mean, the one thing I did learn last year, I was gone on vacation for a good month and a half, out of the country, and I just sold everything out in July, before I left. And it was interesting because I sold it all. I didn't really watch the market. And I came back and, market had gone through a little bit of a correction, but, it didn't really hurt me to not be in the market, right? Like, I mean, there's always opportunity to make money in the market. And so that was another learning, is that you don't need to always be in the market to make money. Like, you only need to be in it a few times a year, and you could probably do just as well as, as if you could probably do better than being in it all the time.
So I think that's a great point. I have a question on that. What I found is that when I get out of the market and I'm distracted by either my business or whatever, I tend to lose momentum. And one of the things that I started doing was, even when the market's shitty, is not necessarily trading, but maybe if there were a few stocks that I liked, I'd literally buy a share to keep it on my watch list.
Yeah.
For example, Nvidia was one. I just love that company. It's solid earnings, solid growth, amazing CEO. They're just constantly crushing it, but timing wasn't there. So, if I wasn't watching it, I'd miss it. So I'd buy one share and just keep it on my dashboard. What is your take on that? Are you constantly involved just to keep your finger with your pulse on the market, or are you just at times completely out?
Like I said, I mean, that was one of the few times where I've been completely out, was last year for like, in July, August. And it was actually kind of nice. But it did take me a little time when I got back to kind of get back into the swing of things. Now, if I'm not on vacation, or I'm not out of the country, then yeah, I'm usually in the market, or I'm at least watching the market all the time. And if I'm out of the market, it won't be more than for, maybe a day or two. But that's kind of what I'm really want to work on this year, is to be out, when this market eventually corrects that we're in right now. I want to make sure that I can sit on my hands and just watch to see what's going on versus get the trigger finger to always be in the market.
Awesome. Okay, so I think that's the conceptual stuff. So what we want to do now is we want to dive into sample trades. What I did ask was Deepak to share several trades that really represents how he thinks in terms of getting into a position, trading around the position, and exiting the position. And I know that one of the questions that many of students ask Mark Menavini is, show us when things didn't work out. And Mark's got a really awesome response to that. He goes, there's a million reasons why something can't work out. So let's focus on what does work. So in this case, I just said, help us understand when you see violations, and help us understand how you see when it's time to get out of a trade that's not working out, to understand your thinking.
Yep.
So,
all right, let me.
And then also, Deepak, if you can talk about the tools. I think you said you keep it pretty simple to MarketSmith and TC2000, is it?
Yeah, I use MarketSmith, TC2000. TC2000 is kind of my main, kind of charting software. And then I also use TradingView, just because I think TradingView has a better app for mobile. So when I'm mobile, I use that just so I can see the market, because TC2000 really doesn't have a online. I mean, they do, but it's not very good. So
just to clarify, for TradingView, you're really using it to look at the market, look at charts, because you're not trading through it, right? You're essentially doing analysis on there.
Yeah. Yeah, I just so I can see the chart like during the day if I'm not in front of my laptop. It's got a good, I think, mobile app, so that's what I use it for.
Okay.
And in terms of my trading platform, I keep it simple. I just use E-Trade and Fidelity are the two that I use.
Okay.
So
are you going to be sharing your screen and walking through some of your trades?
Yep, I'm doing it right now. So what I did was I just took can you guys see my screen?
It says start screen sharing, but it's black. There we go. Yeah.
Right. Okay.
Yeah. So we see TC2000, the AVGO.
Okay. Yep. Okay. So what I did was I just went back through my trades from the competition last year, and I took smattering of trades of the year and throughout the year that I had. So I can just walk you guys through that, and then if you have questions, just let me know.
Okay.
So these are the trades. Is it big enough? Can you guys see it properly?
Yeah, see it really well.
Okay. So one of the things that I did last year is the way I've got my thing set up. I think there was a question about what indicators you use, and so in the past, you name it, I tried to use it, and I just I had all these indicators, but I didn't really know what to do with them and really how to use them, even though I had them on my chart. And it was also very, very messy. So I'll just show you kind of what I used to have. This used to be my charts, right? It was just too much color, too much stuff going on. I don't think I really leveraged all the stuff that was on here or know how to leverage it. So I've gone to a very clean charting of what I look at. And so it's basically it's just price, volume down here, and then 2 moving averages, 3 moving averages, and that's it. And so that's kind of how I like to look at my charts, keep them very simple.
So this one over here that we're looking at is a simplified version where you've got price, you got volume, and you got your the purple and the yellow are the moving averages, right?
Exactly. And then this light gray one is
what are those two? Okay, what are the moving averages that you're looking at?
I look at the yellow is the 50, and then the purple is the 21-day.
Okay.
All right. So this is a trade that I did in January of last year, And so if you look, what this was I would kind of call this like maybe a cheat, if you will. So,
Mm-hmm.
I bought it the day that it went up over this, like to me, this was the pivot. And the day it went over is kind of where I bought it, like right here. And so I held this trade for a few days. And I didn't sell it up here, thinking it was going to keep going. And I ended up selling it, a few days later as it kind of came back up a little bit. So that was one of the trades that I made, typical, I would think this is kind of a typical market sort of
Mm-hmm.
trade. Sorry. Um, One of the things
Yeah,
I
so
do though is
classic
like I
cheat.
do create a lot of
What I'm saying is a classic
exactly,
cheat with tightening on the side, then you see the pivot and you're getting into it. Okay.
exactly. So pretty simple. Um, I do one of the things you'll notice I put a lot of like trend lines on my charts, and as we go through them, I can kind of talk to them. But
Mm-hmm.
to me, it just kind of gives me some idea of where potential resistances or support areas are on the chart. And so I use that a lot too to kind of get in and out of trades.
A couple of
So
questions
like
over
for
here
example, in
on
this
this
trade,
specific trade. For example, you've got overhead supply on the left. Again, anytime you buy a cheat, you're going to have overhead supply on the left. So, I mean, when you take a look at this particular one, I guess that overhead supply is several months in the past, but you've got a pretty
yeah, I
tight
mean it
stop
was
there,
probably
right?
in yeah, so it was like in September. So you're talking it was 4 months ago.
Mhm. Okay.
But if you also look, what I was looking at here, and if you look at this, is that when Mark says draw a line across the thing, I mean this when
Mhm.
when this pivot started to form, right? Like you take a look to the left, and you can definitely see that this was total resistance here, right? Like this was support
Mhm.
for so many times it hit it, it broke the support. And so once it crossed this line, like that, you knew that okay, it's gotten through that, it's flipping resistance into hopefully support, right, moving forward. So
Mhm.
that was part of the reason to buy this as well as it crossed that pivot.
Okay.
Now I thought this stock would go a little bit higher before I'd have to sell. Like I have another, like this trend line that's, if you look at it, it's a longer term trend line, this downtrend line. I thought the stock would kind of get up to that trend line before I would sell. But since it didn't, that's kind of why, the next time it kind of started to go back up, I kind of got out of it at this, on this day here.
Okay. It looks like a great sell.
Yeah. I mean, I got a meat of, the majority of kind of what this was going to give me. It wasn't huge, but
Mhm.
I think it was, let's see what it was. It was a 9% move, but it was almost $8.
Nice.
So that was one trade. Any other questions on that are out there? Or?
Let's see if we have any questions on this specific trade.
I mean, is this helpful for folks? Like, I just, do they want me to kind of go into any other details on this? That would be more helpful.
Hey guys, if you have any questions as we're reviewing this trade, please put your comments on the Q&A as we continue to take a look at this. And if you have any questions um, on the specific trades that Deepak is discussing right now, just put them in the Q&A and I'll ask you questions. I don't see any specifics on this particular trade. So yeah, no, it's definitely helpful.
Perfect.
I got feedback that this is what people do want to see. Okay.
Okay. Um, all right. So this next stock, it was actually kind of funny. I looked at it and I was like, it's $1.96. Why would I buy that? And I don't know, something must have happened to these guys. But when I bought it last year in February, it was now $1.96. So this was kind of one of these, it was kind of like what Mark would maybe call a cap pattern. I don't know what he would call this, but it made a pretty powerful move. And
Mm-hmm.
so what I did was, as if this thing came down here, to me, it was kind of like a very short, it was going to be a short term, it's like a 2 month base here, like a little cup and a handle. And that's kind of
Mm-hmm.
what drew me to this. Let me zoom in on this. So to me, this was the handle that was being built here, right? Like, I mean, it's very obvious. Like if you put a trend line on
Mm-hmm.
it, and what I did was the day that it crossed this downtrend line was kind of like,
Mm-hmm.
to me, like that would be kind of an indication that it's, potentially moving out of this. And it also crossed this little day that, is I kind of, probably not the ideal pivot, but it was kind of a pivot to use, I think. The ideal
Mm-hmm.
pivot is
Mm-hmm.
probably up here. But I
Well,
got into the stock here.
it's shown it's broken the downtrend where you bought it, right?
Exactly. So that was really the main thing, was like it broke the
Mm-hmm.
downtrend. I don't know, remember where like it looks like it went up, started to break out quite a bit, and came back in. Next day, similar, just kind of, the action was getting wide, which wasn't great, and it wasn't making any progress. Though the volume was there, which could mean churning a little bit, but
Mm-hmm.
I held it for a few more days, kind of pull back, and then it ripped up and closed at the high. And I think I just, decided I didn't want to deal with this stock anymore and just got out of it. I made not a lot. It was $4, so it was 11%. So, that was another kind of example of a quick trade that I did.
Okay. Deepak, one of the questions from one of the students is you don't use red and green red bars to look at the round down days. You mentioned you want to keep it simple. Is there a reason you prefer not to have the red bars?
Yeah, I just find it to be a little too like, for me to like analyze all that is just too much. Like I want to see the pattern. I don't want to see the
Okay.
red bars, the green bars, and I can tell by looking at the bar like what it did. So, you know, I, to me, I don't want to use it. This is easier for me. Like it works for me because I can look at this chart quickly and see what's going on there. And then, the bars, you can kind of figure out what's happening here just by where the bar closes at the end of the day.
Okay. One of the questions we have is if you can discuss typically how you set your stop losses, where and maybe in this situation, and then also do you have any rules of thumb
Well,
on how you're setting your stop losses?
yeah. So, like I said, I mean, if I'm going into a trade, 1% is my max. Like that's my rule, right? Obviously, I
Mm.
want to try to get it as low as, less than that if I can. So in this trade, I don't have what I did, but I would have assumed, like if this was breaking out, I would have used this low as my stop loss. So this was low was,
Hmm.
32.55. Let's see, where did I buy this? I bought this stock at 33.14. So, it's a pretty
Sorry,
small,
which low were you
probably
talking about?
I
Were you
bought,
talking about the low of the previous day?
yeah, the low of the previous day. Because if you look at it,
Okay.
in this one or the other one that would have made sense to do would have been this one. This low was
Okay.
32.72. 32, yeah, it was probably this one because it was 32.55. So, and typically when I put a stop under this low, one of the things, this is such a low price stock, like I would do more than 10 cents typically. I'll probably do like 20 cents, and I try not to put my stops on the round numbers, if you will, like 20 at 25 cents or 30 cents or 35 cents. I'll probably do something a little lower than, like, like a odd number, if you will.
Yeah. And
Um,
Deepak, one of the things I've noticed is that, when you buy a low price stock like $20, you're finding that the volatility is so much you can't really get a 1% stop in effectively. It might be more like a 2 or 3 or 4%. But when you're dealing with a larger price stock like $100, $200, you find much more opportunity to get a very tight stop in most cases. Is that something you see?
yeah, for sure. I mean, that's part of the reason I like to look at the bigger stocks, and it gives me that confidence that I can buy a larger quantity and not not over risk myself. Because this thing is I mean, this thing is very volatile. I could have probably gone down, and I would have, even if I would have had my stop here at 32, I would have probably put it at 32, like 36 or 33 or something like that. I
Mm,
mean, it could have
mm.
gone down and hit at $31 or 31.50 or something. Who knows? So that would have been a much larger, loss than what I was looking to do.
Okay.
So that was Ventex Biosciences. Pretty big fall. See, this is why I don't trade biotechs. It
I
just got
know.
clobbered here.
Really, there's just so much
So
speculation, and so many of them don't have drugs out, but they're
yeah,
waiting on data, and if that data doesn't come out, then they're hosed.
yeah, exactly.
Yeah.
Okay, so that was that. Next stock was Cruise Sushi America. So this was one that I saw an IBD and I was like, oh, this looks pretty good. Um,
So was that a low cheat?
this one, yeah, let's take a look at
Hmm.
it. Yeah, I would say this was a low cheat.
Okay.
As you can see, it was down, starting to make the turn back up, and this would have been the first kind of spot to look at buying. Um, and so here, what I did was, once again, I kind of saw this kind of cupish thing, even though this is a low cheat here. But I saw this
Hmm.
pattern. I saw this kind of like downtrend line here where it kept stopping. And
Hmm.
so what I did was I bought it the next day when I crossed that downtrend line. And I probably put the stop on this one. It was probably the low of whatever the low here of these 4 or 5 bars was. 97, 50. It was probably this bar here. Yeah, 58.11. So that would have been the
Okay.
stop, right at that. So in this situation, what I would have probably done was put a stop at like 57.83 or something like that. That's kind of typically what I do. So I'll go down. This is a low price stock. So, I would have probably put it at 57.83. And I try not to put stops. And
5783.
yeah,
Okay,
the
so
reason I do that is
that
like,
would that be below that previous little cup over there? Is that what you're looking at? Below that resistance
no,
point?
no, because this is like 48. So what
That's
the
way,
reason
way low. Okay.
here's where I would have
Okay.
too low. So I would have put the
Okay.
stop at the bottom of this because that was the low of this little
Got it.
consolidation.
Okay.
And so I would have put it under the low of that. And the reason I would go down to 83 is like what I find is that if you put it at like 57, 95, 93, like they'll come and hit that and you'll get taken out. And if you go a little bit
Hmm.
lower than that, a little bit better odds that you don't get hit and shaken out.
So you are really
So
taking a look at a
I did,
shorter time frame in terms of so you're going as tight as you can, but within reason in terms of looking at the past few days of how that stock has done.
exactly,
Okay.
exactly. So that was a pretty tight, and especially like last year, like especially these trades, these were early in the year. So, my account balance was pretty low when I started the contest. So I had to be very, very, precise in terms of where my stops were and kind of what I was trying to do. So, I was trying to make 2R on every trade, and not lose more than 1 hour. So it was like really, really small and tight stops.
Okay. Couple of questions.
Um,
One was, which I don't think we've covered, which is what is your average holding period for your losers and your winners?
yeah. So average holding period was about 6 days for the winners and 2 days for losers.
Okay. And there was also some questions about holding overnight. With margin, you are allowed to hold overnight, right?
Yeah. Yeah. When
Okay.
you get margin, and depending on what you go into, you can hold it overnight without any issues, unless you have a margin call, then you've got 5 days to clean that up.
Okay. All right. And somebody's asking a question that we answered before, which is your average gain and average loss. Average loss is 2.3%, and your average gain is 3.6.
I think it was 3.25 or 3.4. I don't have it nailed.
Okay. So somewhere around there. Okay. And
Yeah. Let me look
50%
at
batting average and
sorry,
150 trades throughout the year.
yep, 3.25.
3.25 and 2.3.
Yep.
Okay. All right. And then 50% batting average, 150 trades. But keep in mind, that's on margin. So if you put this into the RBAF calculator, you're not going to get the right numbers because it doesn't account for margin. Okay, let's move on to the next one.
Right. All right. And so, yeah, so this one I sold, after this was kind of a resistance line. I just sold out. I mean, I probably could have held it for a little bit longer, but I had made kind of my goal for this, what I was trying to do. So that's probably why I sold it right up there. The next one was Google. Let me see where I bought it. Okay, so this was also kind of a low cheat. You could call it a low cheat, I guess. Yeah. But this is kind of where I saw the resistance. I bought it the day it crossed. So here's like an example, a little bit. Like if you look at it, it's like, when I was saying that a lot of times things pull back and then they go back up. So like this was an example, like where it tried to break out, came back in by the end of the day, but then the next day turned around and ripped through there. And so I bought it like right around buy at 110. So I probably bought it somewhere like right up here as it crossed this little the day before it was high. So that's where I bought it.
So
this was just a really
I just want to point out what you're really saying over here. So, what Deepak's really talking about over here is looking at that line cutting across and looking at the short-term resistance. Yes, there's long-term resistance, but the long-term resistance. So this particular buy was in May, June, but if you take a look at it, the overhead supplies way back a year ago. So what he's done over here is he's looking at primarily the resistance over the short term, and looking at the breakout to cross that short term resistance. Am I correct in saying that, Deepak?
Exactly. So like, when you look at this was the downtrend, and this is where it's starting to make the turn back up to the right side to create the right side of the cup. And so if you look at it, sorry guys. So if you look at it, right, like, and this is not that short term. I mean, it is short term, but it's still three months long, right? So I mean, that's a decent amount of time. And this is like typical Mark Minervini, right? Like it's got the VCP pattern here, and it's tightening up, and then it breaks out. I think I was a little too, jumpy on this one and sold it way too early. But this is like a typical Mark Minervini low cheat VCP. This is like a little VCP over 3 months, and then it breaks out to the upside.
Yeah, quintessential. I mean, literally perfect.
Yep.
You've got that cup, you've got the handle, then it comes back, then it does a tightening, and boom. Right, that's textbook.
Yeah. Yep. So this was a good one. I wish I would have held it longer. It did make go up quite another 5%, $6. So, but anyways, let's see what I did on this one. I think I probably sold this out. It was $9 move, 8%, but I probably sold out because it did a reversal that day. But this is something like that I've learned that I need to, like, you can't get that jumpy, and I mean, it did nothing wrong. Look at the chart. Outside the fact
Right, it was
that
just one day reversal, right?
But the 1 day reversal, and it closed towards the low end, and the volume wasn't even that high. So like this is one where that was a bad decision for me to sell it. I think maybe if I wasn't in the contest, or kind of just, I was really abiding by the rules I had set for myself, and just get out of stuff and just bank the profits and keep going. And so this thing really did nothing wrong. I sold it. I shouldn't have sold it. And I could have probably written this up a little bit further. And even here, it didn't really, it was just kind of textbook pullback.
Talk a little bit about your stop over there.
On this one. Yeah, so I think the stop on, let's take a look. I don't know if I put a stop on this. It would have probably been down here, I would think. I don't have it written down what my stop was, but if I was looking,
but if you were to guess what your stop was, where do you think it would have been?
I think if I was playing this, like, I would have probably put the stop either the day before, or I would have put it down here. Like, I mean, the logical stop here is to put it like down here, really.
Right.
To me, that's
Okay.
kind of the right. So I don't remember how much I bought. It must not have been a very large sum, especially, if I didn't have a tight stop on it. So I think, I may have bought less shares and let it go.
Okay.
But I mean, if you look at this, the place where it would make sense to put a stop on this thing, if you look at this chart, right, like on this day, like if I was going to draw like a little support line here, like this is kind of what I would have done. Put a little support line here. So like the real stop would have been like, shouldn't have gotten below even this trend line, really. So like that would have been a good place to put a stop, is like maybe right below this particular bar. So the low was 105.16, maybe put at 107, 104.73, which would be underneath this trend, providing support over here. So like that's another great stops. Like that, I also look at that.
Okay.
So
question over here is, okay, what was the stop loss? I think we've answered most of them. Are you primarily looking at the daily chart? Are you looking at the weeklies? Are you looking at 15 minutes? Talk a little bit about that.
Yeah, I mean, to find like what the chart is doing, like when I do my scan work, I'll look at the weeklies and the dailies, right? So yeah, like on my scan work here, like I'm looking at it, at a weekly and a daily chart as I'm going through and scanning to see what stocks look, like they're in a good trend from a weekly perspective. And then I'll zoom in on the daily to kind of find out where the resistance is and what the actual trade would be.
So very similar to what Mark Ritchie and Mark Minervini do, is they're looking at both the daily and the weekly.
Yep.
Okay.
Yep.
All right.
Now, when I'm about to buy, when I'm about to buy, I was just gonna say, when I'm about to buy, I may go down to the 5 minute to kind of figure out where to buy it that day. And then maybe I'll use a 5 minute chart.
That?
Like, yeah, I'll do it. Like, let's get into like some of the more recent trades, because I can't go into the 5 minute on this from that far back.
Okay.
But I'll cover off kind of what I'm going to buy and kind of why I look at the 5 minute chart too.
Okay.
So that was Google. So Netflix was an interesting one. So I traded Netflix quite a bit during the contest last year, and was a very, very good trade for me overall. But here's kind of like, this is the anatomy of this trade was, okay, so you see this, look at the bigger picture here. So Netflix, was starting to create this kind of cup and starting to make the right side of it. It had this downtrend that it kind of fell into here. And so I basically just took and drew this trend line where it was stopping and getting stopped out. And so this was like a great trade, because a few things were happening on this. One is there's a very distinct downtrend, and if it breaks that downtrend, things could be changing, right? And the stock is ready to move up. The second thing that was interesting is that all these moving averages were all converging together, right? And so that was also something that I looked at, and I was like, okay, that's a good sign that the moving averages are converging, because it's got some opportunity then to move up. It was over the 200-day, which is this like light gray line. And so, when I talk about like, it tried to break out here. If you look at it, broke out, didn't make it very far, came back and retested this trend line and the 50-day moving average. When it bounced off of this 50-day moving average, that's kind of where I did my first buy. I bought it. It ran up. And during this time of the year in May last year, I don't know if you guys recall it or not, but we had just gotten out of all that, the bank situation. And the market in early May, mid-May, started to turn around, at least for the mega caps. They were starting to move. And so I was getting pretty aggressive at that point. So I bought it this day. I held it. To me, this was like a nice little, consolidation, a bull flag. Um, it broke out of that, went back up again, and then kind of tightened up here a little bit. And what I did when it couldn't go any lower than this that day, like this was to me like a good area of support. When it couldn't go any lower than that, it reversed back up. This is where I added a lot more shares on my on that day as a second ad.
That's
And
perfect.
yeah, and so I think what I probably did was I would probably put this as my stop, would have been on this day, because this was kind of the low of that day. The low was 396.93, 396.34. Maybe it was lower than that. I don't have my stops that I put in for these. Anyways, I bought more. I let it run. I was very heavily like, this is like one where I was probably like 150% of my account value was in Netflix. And, it went up for a few days, and then I dumped it right here when it had this big down day. Little bit of higher volume, and I was out of it. So that was kind of an example of one where I would have gotten very aggressive because the market was doing well, the big caps were moving, and this stock was set up really, really well in terms of, it broke this downtrend line that was, it had been going down for, 3 months again. Moving averages were all aligned, and so this is where I kind of pulled the trigger and just, kind of overloaded on it and caught that nice move there. So,
Now,
like, for
on the day
example,
you
this
sold
move,
it, was that purely based on a entire down day and showing that weakness? Were you in the 15-minute charts, or were you
yeah,
purely making a decision
I
on
was
the
probably
daily
down.
chart?
No, I was probably down. There was a couple things here that would probably have triggered my sell. One is that when you look at it, I mean, this thing had moved up $100 from here. So my initial set of stocks, or the initial buy I had to this point, I made $114 on it. So the fact that it couldn't cross high that day, and it was kind of it wasn't a bad, it was a decent close that day. The fact that it couldn't cross it, and I was loaded up, I just got, as soon as it kind of broke this, I probably sold it and said I'm out of it, and took my profits.
Okay,
So that's
fantastic.
kind of like, yeah, so that's kind of like this. So I think I played this stock several more times, like just, here you can see I didn't get much out of it, but there was, and talk about bad trade. Oh, this was the trade. Okay. Let me just show what happened here. So this thing started to turn around, right? It's kind of like going up here, it's tightening up, and I'm thinking, okay, you know what? This is going to break to the upside. So I bought some on this day. Just, it was an inside day. If you look, the volume is super low here, and it's just really quiet. So I'm like, okay, this is going to break out. I'll buy some shares here, and I bought it. A few days go by, nothing, and even this really didn't break anything. It didn't break any of my stops that I had. So I held it, and then the next day, I took a big plunge of like $22, and I had a pretty decent size on this. This was my biggest loss last year in my account. So it's when the CFO was at a conference, at some financial conference, and said, our margins aren't going to be as good as everyone thinks, and the stock just like instantly fell. And by the time I even saw what reacted to it, it was, I was down $20 on that trade, and just sold out right away.
Where was your stop?
I didn't have, I mean, I had a mental stop on this one.
Okay.
So, I didn't have a stop that was in the system. On some of these, I don't like to put a stop in the system. I'll just have like my mental stop, or I'll have an alert to tell me like it's crossing this price and I should look at it. And so this thing crossed below the 50-day, and I got the alert, and it just went down real fast that day.
So
there was
we
no
had a
time to
question that we had a question via that Tysus stops, and it's probably a good one to get into. So Ollie asks, Deepak mentioned strategy avoid a stop being hit. So does that mean he puts a sell stop with his broker? Well, and what I'm hearing from you is most of the times you're putting your stops in there, but then sometimes because you're trading throughout the day, you've got a mental stop and you've got alerts to tell you when to get out.
Exactly. Exactly. So,
Would you say on
in a
80% of your
situation like,
trades, you actually have stops in there?
I would say probably like 70% of them.
Okay. And what's the reason that you don't put a physical stop in when you do it mentally or with alerts?
It just depends on the stock. Like I feel like sometimes on some of these stocks, like, they can get a little, like, I don't want to say like the market makers, but in essence, what happens is sometimes they just they see a stop order out there and they'll go clean it out. And then you're
Got it.
kind of like, and then turn around and go back up. And I've seen that happen like a lot. I mean, it happens quite a bit with these bigger stocks too, like the mega caps. So that's why I didn't do it on this one. And my stop was so minuscule. Like a lot of times I'll just watch it. Like it may go below the stop, but then it'll just pop back up. And so then that's why I'll watch it on like a 5-minute or a 30-minute chart to see kind of what it's doing intraday before I make my decision to sell it. But in this one, like I said, I had no shot at it. Any other questions on this one?
Okay.
Stock did well today, huh?
Nope. Wow. I wonder what the news is.
Earnings. They have good earnings.
Okay. That's some serious volume there.
Yeah. Yeah. I mean, this is one where, I would say like folks should look at this stock and, if it doesn't close this gap or kind of come down to it, or it just comes down a little bit and just, quiets down for a few days, like this could be one that, has more room to run. See if it kind of creates a little bit of a flag here. And that might be one to take a look at.
It sounds like if it does create a flag and tighten up, you're getting more in.
Yeah, I mean, it did it over here. If you look at it on their earnings, I mean, it's similar volume, big gap, just sat here, went up and down a little bit, but just kind of consolidated for a few days, and then broke this downtrend line and then just shot up. So, it could potentially do the same thing here. So this will be on my kind of see what it does. Do you guys want to keep going, or do you want to? Is this helpful?
Guys, how do you feel about us continuing? We'll do a couple more. I mean, we've gone nearly 2 hours. Yeah, let's hit a couple more. And
okay.
Yeah, I mean, this is really helpful.
Yeah, I mean, if it's helpful, then yeah, let's do a few more. Let's look at HubSpot.
So you got a classic cup with handle over here.
Yep. So.
And this is what Mark Ritchie calls fractals, right? Because we got a cup and handle, and we have another cup and handle, right? And he loves those because that's just.
So this is actually. Yeah, I mean this. Like I'm looking at this for now. Like I mean, if you look at this, right, this is like great DCP, right? It's made this, came down, tightened up, and now it's tightening up here. I thought today might have been a day to buy it, but if you look at it, like it tried to go out once, came back in, and even today it tried to go out. It closed on the low. I think the next time this kind of crosses this line, I think this is gonna probably move. I mean, if you look at it, you talk about fractals, right? Like there's this fractal, right, where it's doing this, and then there's a right here too, right, within the kind of, if you want to call it.
Exactly. So this is actually a really interesting setup for several reasons. One is, it's textbook cup with handle. It's got fractals, and it doesn't have any overhead supply where it is, right? At least not in the view that you have.
Yeah, nothing immediate. I mean, it was, yeah, I mean, that's way back here. I mean, it's back in 22. So
So it doesn't even matter
far enough
anymore.
back. Yeah.
Right. And so
So
the
this is
question
one
over
on my
here,
radar.
so one of the things you mentioned yesterday when we were talking is that one of the things you're working on is not buying too early, that you felt like there was I don't know, several situations where you thought you bought early. This one would be like, I would make the mistake of buying too early over here because it looks so good. What's your take on it?
Yeah, I mean, I would have probably bought some too, but I have no you know, I'm already kind of invested right now, so like I couldn't buy it. But I do like it. I think
Yeah.
even if you bought it early, I think that even if you bought it, say you bought it today, right? Like it hasn't done anything wrong, really. I mean, outside of closing on the low,
Yeah.
it didn't break below any of these two, and the volume was
Yeah.
super light compared to the average volume. So I still think like I think if it comes down to like into this the 21 day, like I would really consider buying it, and then you know you could put a stop probably below this right here.
So
Actually,
this
even
is a
below here.
classic situation that describes exactly what you've been talking about throughout this webinar, is you like higher price stocks. And one of the things that we're talking about higher price stocks is that if you take a look at the volatility on those last three bars, your stop's going to be so small, right? So, I mean, if you were to buy
On a
this, where
500,
would you set your,
yeah.
yeah. So
So like here's
let's
like
do some
an area
numbers
where
here for the audience.
yeah. So okay, so from an ATR perspective, I mean it's a $15 ATR. So I mean that's a pretty big move, right? So here, like what I would do, like I mean, I'm actually looking at this one. I do like this a lot. If I go into the 5 minute chart here and take a look at what it looks like, right? I mean, it's kind of VCP-ish, right, at the 5 minute.
Mm-hmm.
What I what I don't like is there's this like little bit of a gap, but it looks like it kind of closed it. So I mean, I would really look at this, and if you were like, say, you were to buy it today at the end of the day, right? You could have probably bought it at the end of the day, and like when I say put a tight stop, like I would have put a stop like right here,
Mm-hmm.
579. Like you know, this would be kind of
579
an
and
interesting
mm-hmm.
like, and this is looking at it at a 5 minute, right? So I would say, you know, like when you look at it here, like it came down, it couldn't get below this price. It came down again,
Mm-hmm.
and it didn't even get below the previous price, right at the 5 minute. And this was 3 days ago. So if you think this is going to go back up and turn around and break out, then either you could put a stop like below that, but I think like give it another few bucks and just go like right here. Like that's where I would put my stop right there. 579.20. I would probably put it at 578.73. Is kind of where I put the stop.
So I just did some
From
very
here,
quick numbers, not entirely accurate, but I mean, just so you bought it at 590 and you put it at 579, that's a uh that's a stop of 1.86%.
yeah.
So the beauty about buying these really high price stocks is you can get those really narrow uh, stop losses.
Yeah, and you know, on this situation, what I would do, like if I really wanted to get in on this, like say I wanted to buy 1,000 shares, I would probably buy like I'd buy it like what we just said, like maybe buy 250 shares and see what happens. Like, does it go down? And if it starts to turn up and it never even comes down, and that stop is pretty safe, and it starts to turn up and starts to kind of go back up, I would then right away start to buy some more. And then I'd put my stop like say tomorrow it opens up and it kind of, you know, just starts to go up from here. I would then
Mm-hmm.
right away I would start buying it, and I'd maybe buy the whole position or buy like, you know, another 250 shares and keep my stop on the second one like right here. You know, because
Okay.
I'm
Now,
saying it's not going to come down. I think it's going to break out, you know, today versus come down and, you know, retest that, if you will.
okay.
So that's how I would add to it. Like if
Okay. So are you finding that in most of your trades you're kind of going in multiple tranches as opposed to just one buy?
yeah, I mean I'm not buying Like if I'm going to buy 1,000 shares of this, I'm not buying it all at once, especially in this
Okay.
situation, unless like it came. Okay, if I would maybe do it if it came down. Let's take a look at this. Like if it came down here and just kind of touched the 21 day or this, the 21 day in purple. If it came down here, touched the 21 day, started to turn back up, then I would probably buy the whole thing and then just put a stop like below this, like, that's 58. The 21 day is at 68. So it's like a $10 stop. So, it's like a 0.5% stop on it.
So can you unpack that for
So it
the
just
for the
depends.
students? You mentioned it comes, it touched a 21 day and went back up. Help us kind of understand your logic behind that. You saying that it's got good support on the 21 day and it's bouncing off that, and that demonstrates strength. Is that what you're saying?
Exactly. Yeah. Yeah. I mean, there's two trains of thought here. One is you could say, you know what, I'm going to buy my 250 here at the 21 day. That's going to be my buy point. I'll buy it at the 21. And then what I'll do is once it crosses and gets, over this, this line here, then I'll buy the rest of it. So I'll buy it on the breakout. And so now you've got it, some shares that you're buying at close to 600, but you've got a small 25% of your shares that are at 570. So you've got some cushion there. So, that's another way to approach it. Depends on kind of what you're comfortable with. And, I would personally buy it at 570, put a tight stop on it. And then, especially if it's bouncing 21 day, that's the way I would approach it. And what I might do is if now, let's say I bought my 1,000 shares here at 570 and now it's at 600 and it's breaking out. Now I got $30,000 cushion. Now I might double up on that and just put a tight stop on the new position and see where it goes.
Okay. Deepak, one of the things that we didn't talk about when scanning, how big are you on earnings and sales growth? Or are you primarily on charts and, RS?
I like to buy stocks that are, making money. So I do look at the earnings and sales. I want to see that. I want to see, like last year, if you weren't making money, basically your stock wasn't moving up. It was the stocks that were making money that were, that had earnings, good earnings and cash, the ones that were moving up. I do look at that. I find it important. Now, if I'm only trading it and I'm only going to be in it for 6 days, like I don't know if it really matters, but it could matter. It just gives you more confidence in the fact that, okay, this company is making money, they're doing well, they've got good earnings, good growth, and I'm going to buy it. Like one of the things that happened like last year was in November, a lot of the small cap stocks started to move, and I started looking at them, and a lot of them were like Affirm and all these other Upstart and all these things that were moving, and those guys don't make money, and so I had a hard time with those stocks and really loading the boat on them because I just wasn't comfortable. I do like to make sure that they're making money versus losing money when I buy.
Yeah. You're stacking probabilities. All right, let's we're nearly at 2 hours, so let's do one quick one and then wrap up, because you've given us 2 amazing hours, which has been incredible. Then we can wrap up with a few questions.
All right, so here's another one. Let me see which one to do. They're both pretty good. So this is probably a good one to do. Sorry. Can you guys still see this?
Yep.
Okay. Sorry, my computer's running out of battery. Okay. So, NVIDIA, one of the darlings, right? You mentioned you love their stock. So here's one where I really just kind of loaded the boat on, if you will, and pressed it. So here's what was going on in my head here was that when you look at this thing was like, it was obvious where the resistance was right there.
Right.
right? When you look at it, couldn't get over $600 or $500. And so earlier this, when it started to move, like, this was kind of like what I looked at, was that this tightening here. And, if you notice here, like no volume, near the moving averages, which was good. When it crossed over this little 2 days of nothing, if you will, like just sitting there tight, I bought some shares here, and obviously it acted well the next day, and then it acted well the next day after that, and then it tightened up here, then kind of just rested. Didn't really make a lot of progress. Closed high, and I must have bought it at some point during this day, and I really bought quite a bit. I think like where I was definitely on margin, heavy margin on this one, and it sat here for a few days, but then just kind of took a few days, but then it rocketed up close to 600, and then this is I just kind of sold it all out 2 days.
Yeah, and then look at that.
When it,
Look at that one day of super tightening. I believe on the 15th. That where there's barely any volume, and then yeah,
this one, the 12th, yeah.
yeah.
So like
I think I would have been salivating on that.
Yeah. So that was a good trade. I mean, I made almost $100 on this, and let's see, not very many days, probably like 6 days, 7 days, whatever it was.
So you made $100, 20%, not only in 6 days, but you also were doubled up on margin. So you really crushed it on this.
Yeah. And you know what? This one was kind of a no-brainer. I mean, the risk on this thing was like, even if I bought it here at where it closed, 490, right? The risk on the downside was like 473, 471 maybe. So very small.
18 divided by 470. It was basically 0.03%.
Yeah.
Yeah. So wait, hang on.
That's why I like these higher
sorry,
price
3%.
stocks, is that
Okay.
3%. I mean, not much risk overall. And you can get a 90-point move. And even if you had like 300 shares, that's still 27 grand, right? So that stuff adds up when you can start doing that.
Yeah. Okay, this has been amazing. We're going to wrap up. So, guys, really what we've talked about over here is we talked about Deepak's background. We talked about his transition to the Mini-Vini methodology. And, Deepak, you mentioned some of the critical things for you have been progressive exposure, going into low risk entry points, and then really keeping your risk low. And then when things are going good, just piling in and concentrating. Those are some of the big things that have been attributed to your success. But besides that, the amount of years you put in learning, you're just such a perfect example of somebody that's obsessed. And again, I say that as a compliment, because a lot of people hear that and they feel like it's a hit. No, it's being obsessed is not easy. And every time I speak to you, I'm blown away at how deep you're into this, and how it's become second nature to you. So I can totally see why you're doing 100% every year is not a big deal.
Thanks. Yeah, I mean, hopefully that helped out. Hopefully it wasn't too much detail and too much overkill on kind of the approach on the charts, but
it was unbelievable. I mean, I really appreciate you, dedicating 2 hours of your time, but not just dedicating 2 hours of your time, but just being so humble and sharing and teaching has been amazing. Let me see what are the questions that we have over here before we wrap up. We have some questions on NVIDIA, but I think we can pass on that. Let's just focus on wrapping up. Yeah, I think everybody said, big thanks, and they've really enjoyed it. This was great in all caps. So people have gotten a lot out of this. Hey guys, what I suggest you do is, if you have questions that we felt like we haven't answered, I'm going to go through all these questions over here. I think we've answered most of them, and I think some of you guys came on a little later. So I will be posting this recording on YouTube so you can watch it again. I do see some of these questions asked that we've already answered. No, overall, thank you so much, Deepak. Really appreciate it. Are you back in the championship this year?
Yeah, I'm gonna probably try to do it again this year. So
that's awesome.
Awesome. Well, we're all rooting
Yeah.
for you.
I mean, I
Yeah.
like it. Yeah. Keeps you accountable. So it's good.
Fantastic. All right. Well, thank you so much for the 2 hours today. We're exactly at 2 hours at 5 o'clock. Really appreciate you. I can't thank you enough. And honestly, this has been, I think, one of the better interviews that I've seen. Not because of me, but because of you and the detail you've gotten to. Typically the interviews we watch are run by Mark Menavini, but I think over here, being a student and also getting a lot of student questions in has been really helpful. So thank you so much. And guys, if you have additional questions that you
Yep.
want to ask at a later point in time, let us know, and I'll catalog those and
Yeah.
send them out to Deepak.
Yeah. Feel free to do that. Happy to help if hopefully that helped you guys out. And I'm on the chat, so you know where to find me.
Awesome. Thanks so much, Deepak.
Thanks,
Have an
everyone.
amazing evening.
Take care. Thanks,
Take
Raj,
care.
for doing
Bye.
this and spending the time prepping.
Hey, thank you. Bye.